Hello and welcome to this discussion on sustainability in Treasury with myself, Nigel Owen, Head of Corporate Origination here at TreasurySpring, and my special guest today, Kirsty Wilman, currently COO at Rebalance Earth after a career in real estate. Welcome, Kirsty. Perhaps you could give our viewers who haven't heard of Rebalance Earth yet a quick overview of what the company does.
Yeah, of course, and I'm delighted to be here, so thank you for having me on. So at Rebalance Earth, we are setting up a fund. We are investing in the restoration of nature, and that is where there is an economic or financial risk that is arising from nature degradation, and we are looking to restore that and have the companies, the beneficiaries of that restoration, pay for it. So they might pay for it because it's reducing a risk, because it's increasing their resilience, or because it's giving them certainty over their supply chain. But we're very much in the space of nature restoration because of the risk that the degradation is giving us. This isn't philanthropic, charitable, nice to have. This is like essential infrastructure for the UK.
Great, thank you. I'm sure you can see why we're so keen to get Kirsty on this discussion, which complements our Sustainability Impact Report, which the fourth edition of which was published recently. You can now find it on our website or on our LinkedIn feed. If you're here watching this, I hope you'll find the report interesting, and we'd love to get your feedback on that. But plugging over, we're here to hear from Kirsty today, so, rather than me. So Kirsty, let's start by setting the scene. What did you see as the key trends in sustainability in 2025, and how, in your opinion, did they shift from what we saw in previous years?
So I think, unfortunately, there's been an ongoing trend of ESG isn't fashionable. We don't have enough money to do it. We've got other things to think about. And sort of that rhetoric that we hear from the US of, it doesn't matter and we need to think about, financial metrics more. I think that's continued, which is a shame. I think what's really positive, though, is that we started to see sustainability properly ingrained in some of those financial conversations. So companies who are recognizing that it's not about ESG and ticking a box and doing the right thing, but it's about securing a future supply chain. It's about reducing your flood risk. It's about having access to clean water to using your manufacturing plant. So I think there's been a positive shift in that sense. And I think really excitingly, particularly for us, is seeing companies talking about nature and talking about their nature commitments, which feels like it's becoming much more mainstream, much more common. And I think overall, it's disappointing to hear like the ESG is out sort of rhetoric, but I think overall the fact that it's repositioning as it's more than just the right thing to do is probably positive in the long term.
Sure. And how have you seen sustainable finance strategies evolve in other organizations, and any examples of what you would call good sustainable finance strategy that you could pick up on?
Yeah, so where organizations are thinking about sustainability in their financial strategy, what we start to see is people thinking about what's actually on the balance sheet. So sustainable risks have never been on the balance sheet, really. And you don't have a company recognizing we've got a future liability because that supply chain is limited, therefore we can't keep making that product, or we've committed to net zero by 2035, therefore this is the path that we need to take. And I think where you see companies doing this really well is where it might not be on the balance sheet, but they are talking about it openly and publicly. And certainly there's a lot of companies that now in their financial statements recognize those risks, talk about those risks, and talk about what they're doing to mitigate those risks.
Okay, and against those positivities, what challenges have you seen in the most recent 12, 18 months?
I think there's a number of challenges. I think there's a number of companies who don't necessarily recognize the risk yet, don't understand the extent of the risk, or who still see it as we have this risk, but it's okay because we have insurance. So it's a risk, but it's not something I can do anything about. And I think that's an ongoing risk. I always equate it to cyber risk. This is my favorite comparison. That we don't sit here and go, there's a cyber risk, but it's okay because I've got insurance. We do everything that we can to reduce that risk, and we still have insurance. And I think of sustainability risks in the same way, that yes, you can insure against your building flooding, but what else could you do to reduce that risk and stop it happening? Because even if you have insurance, if the building floods, you still have to deal with all of the disruption to the business. So I think it's a shame to see companies that see it as not, it's not my problem. I think the other big challenge, which is an ongoing challenge, and I think isn't improving, is the reporting. I think it's, there's complicated reports, there's numbers everywhere, and when you just take a step back and go, what are you trying to tell me? It's very hard to really understand it. And you have some companies that do all the reporting that they have to do from regulatory requirements, but also put a really good narrative alongside that to explain, and this is what that means. And you have other companies who are just doing the reporting. And when you try and go, so what? It's very hard to interpret.
But as ever, always against challenges, there are opportunities out there. Where do you see the key opportunities as we start to look forward to 2026 and beyond?
I think there's huge opportunities. I think the UK is one of it's the country in the G8 countries that has the worst nature degradation. And so when you're in that bad a position, the only way is up. And so there's a huge amount that we can be doing. And the opportunities are on lots of different levels. So there's an opportunity as an investment to invest in the restoration of nature and to get a really good financial return from that. There is the opportunity to look through your supply chain and do some really directed work on, what's my risk, therefore what do I need to do to address that. And I think for lots of companies, there's a massive opportunity because whatever the political narrative is, whatever's in the papers, all of the public perception surveys show the same thing, that people do care about sustainability, and they do care about where they're putting their money. And so there are lots of companies who can get ahead in sustainability, reduce their risk, secure their future supply chains, and actually keep their customer base happy, which, surely that's got to be an opportunity in itself.
Sure. So when companies are managing their short-term liquidity,
Mm-hmm.
how would you advise them that they can embed those sustainable finance principles realistically, let's be honest, without compromising financial flexibility or the returns that they are under pressure to produce?
Yeah, absolutely. And I think there is an ongoing tension between that sort of long-term desire of where we want to get to and the short-term realities of business. I think, first of all, I would say if you truly ingrain sustainable thinking in every decision that you make, then that's a great first step. So where is your money going? What funds are you putting your money in? Are they targeted towards things that really stand for your company values? So if you're talking about sustainability, then where is your money? That should be somewhere that is reflecting that. I think in every decision you make, so which suppliers you're using, are they aligned with your values in terms of sustainability, or are they doing something that actually you wouldn't do in your own company? And making sure that you're asking those questions and using that influence. Because when you're a buyer, you've got influence. You've got, you're spending money. You've got influence, and you can use that influence in a really positive way. And I also think in the bigger picture, looking at what are your end goals. So in 10 years' time, if you've had a really successful sustainability strategy, what does it look like for your business? What does it mean? And then trying to break it down in how you get there. So you don't need to do the whole 10-year spend in one go. There's lots of ways where you can participate in that sustainability market in smaller slices that make it much more manageable. I think one of the things that has been really difficult in the sustainability world is this feeling of like, it's too much. I don't know what to do. It's too big. And I think breaking it down is really important for all of us to be able to make sure that we're making some progress.
So as we start 2026 here now, and you look to break down those sustainable principles, what trends do you see being the first ones that we're going to see this year in terms of shaping capital allocation, corporate treasury strategy? Where do you see, when we sit here in 12 months' time, what will we look back on 2026 and comment that we've seen?
I think it's the year of data. I think there is a need for a reliable way of measuring what we're doing, how we're doing it. I think, as I said earlier, there is no shortage of data in the sustainability world, but it's about the quality of that data, how we're using it, how we're interpreting it, and trying to get some sort of consistency, some sort of measure that we can say, this is the goal we're all aiming for. And I think, all of this it's still very new. And so where you have convergence on a set of standards in other areas, these standards haven't yet converged. And so using the benchmarks and standards that we have as much as we can, but also recognizing where they are flawed and where they need to be improved. I think that's going to be one of the major things. I think there is definitely a feeling of, and I think part of why the sort of ESG is seen as a negative thing is this feeling of I don't know what I'm spending my money on. And so I think data will become really important in all of that.
Yeah, it's interesting that you mentioned their reporting. We've seen the word ESG go from being in every sentence a few years back on a report to virtually not mentioned. And it feels like the pendulum swung one way or the other, and now we're back to sort of a middle ground. Is that the way you're seeing it as well?
Yeah, I think so. I think ESG is still a dirty word to an extent. I think we also have got really caught up in this really strange world where you can't talk about ESG and you sometimes can talk about sustainability. And certainly in the real estate world, responsible property investment was the term that was used probably 10 years ago, and then it fell out of favor and then it came back into favor. And I sometimes think, who cares? And actually, we should be focused on the substance of what we're talking about. I think one of the things that we've seen is much more discussion around sustainability, which I think is a more holistic term, but much more about risk and resilience. Whereas before, and I think this is one of the reasons why ESG is seen as a dirty term, I think it was very seen as I'm doing this because I'm good. I'm doing this on top of everything else. But there almost isn't a link to my financial return. I'm just doing this so I can tell people about it and I'm good for the community. And I think when we start talking about risk and resilience, it really brings it back to a financial return. It's not nice to have, it's sensible, good business.
It was interesting. I was going to ask you, how you see the definition of green or sustainable evolving, because it has over a number of years. It has evolved, and how can companies ensure that they are not just compliant but credible in their approach to this?
Yeah, and I think it's hard. I think the best thing to do is really link it back to what you need and what you're doing. So I think, when you have a company who's saying, this is our company goals, this is what we're trying to do, and to make sure we've ticked the sustainability box, we just buy some carbon credits, but actually that's not related to what we're doing at all, then that becomes much less credible. Where you have companies that say, these are the risks that we face, holistically, I'm not just talking about sustainability, but these are the risks that we face, and this is what we're going to do about them. And in there will obviously be some sustainability initiatives. And when you link those back to what you're trying to do, when you link them back to the end result that you're looking to get to, you end up with a much more credible approach. And I think if you can do that and talk about it and explain why you're doing it, that becomes really credible. I think the days of being able to say, it's okay, we bought some carbon credits, are long gone, and as they should be. And I think if companies take that approach, you end up with the ability to look at nature in, I keep saying it, but a much more holistic way, where you're not just saying, I'm trying to solve my one problem. You're looking through your supply chain of, it's not my one problem, it's all the problems that I'm exposed to as a whole. And that becomes much more credible.
Okay, interesting. And again, another phrase that comes up quite regularly is sustainability leadership. Mm-hmm. How do you see that? What does that look like in practice to you?
I think true sustainability leadership is having sustainability ingrained in every decision. And I was about to say, talking about sustainability in everything that you do. But I think true sustainability leadership, it's so ingrained, you don't necessarily talk about it as much, but it is a factor in every decision that you're making. I think, boards should be talking about sustainability, but not as a standalone topic. They should be talking about it in their risk registers. They should be talking about their supply chains, all of those things, and addressing them in the same way that they would if they were talking about cyber risk or, any other type of risk that we have. I also think because of where we are in the market, true sustainability leadership is unashamedly being open about it. So telling your customers what you're doing, making sure that you're effectively bringing your peers with you. I don't think this is an area in which we should be competing. This shouldn't be the differentiator of why one. It might be a differentiator, but the reality is no one can make a difference alone. So we need to work together. And so I think true sustainability leadership is about bringing people with you, as well as getting on with it yourself.
And are there any sectors or industries that you think are doing that better than others at the moment?
I don't. I think it's pockets of forward-thinking companies. So I don't think there's one industry that's much better. I think you can see consumer goods industries are really under pressure because consumers care, and so they are thinking about it more, probably more publicly talking about it than lots of other pockets. And obviously my old stomping ground, the real estate world, I think they're doing a really good job of recognizing that it's not. So you see a lot more of refurbishment rather than knock down and rebuild, and really clever, like things that seem really small but are quite clever. If if you're building buildings next to each other using the same crane and not bringing in two cranes, which reduces your carbon footprint. And each thing in isolation is quite small, but when you start to see the impact it can have when it adds together is really positive. So yeah, I think this is an area where companies need to step up. I don't think there's one industry that's doing it brilliantly as a whole.
We've covered quite a lot of topics already just in 20 minutes of the discussion. I can see some treasurers or CFOs sitting there going, this is almost overwhelming me.
Yeah.
Where would you advise them the best place is to start with this, to build in bite-sized chunks that are achievable in 2026 with a longer-term goal?
So I think it is overwhelming. And I think it's okay to recognize that it's overwhelming and to recognize that I on my own cannot make a difference. This one company cannot make a difference. But I think the key thing here is not to go, well, I won't bother then. I think it's looking where you can make small changes and make them add up. Money buys influence, whether we like it or not. So putting your money in a place that aligns with your goals and your values. So in every way. So day to day, where is your money? What bank is your money with? What are you investing in? Does that align with your sustainability goals? Does that organization align with your sustainability goals? And if not, why have you made that decision? Challenge yourself on those decisions. And those decisions are on their own small decisions that we make every day, but actually can end up with a huge shift in where capital is placed if everyone thinks about it in that framework. I think making sure that you've got policies that support your goals and what you're trying to get to, but also with underlying procedures that put those policies in place. So there's no good having, I've got a sustainability policy that says this, and then every time someone travels, they hire a private jet. You've got to create that link. And again, it might feel quite small, but it's important. I think measuring what you're doing. So in lots of corporates, you see there is a drive to sustainability, but because there isn't the data to support it, people then go, well, what did we spend that money on? What was the point of that initiative? Why are we, moving money around? And I think if you can provide the data to support it, then you can bring people with you, which is really important. And I think, as I said earlier, when you're spending your money, does that align with your company values? So which suppliers are you using? And what do you ask those suppliers? So, when you bring a new supplier on board, you go through all of the due diligence on, can they deliver what I want them to? Have they got the capacity? Are they stable? But part of that should also be aligning with your sustainability goals. So are they doing the things that I would want them to do from a sustainability perspective? And if they're not, that doesn't mean I'm never going to use that supplier. It might mean I want to use that supplier, but I'm going to ask them to shift some things so that they do align better with us.
Sure. And you mentioned there that nobody can do it on their own, but obviously there are steps that each individual can take as well. Things like pensions. Yeah. What other areas would you advise individuals to say, do you know what, you can take a small step on your own, which if we all do it together will become a very big step.
Yeah, absolutely. I mean, the amount of money that is held in pensions and wealth in this country is staggering. And I think it is, even for people who are in the investment industry, and I'm an accountant, it can just seem like this whole complicated mess of like someone else can deal with it for me. I think, again, challenge yourself as to your own values. So where are you investing the money that you've got? And that the money that you've got in the pension, for most of us, our pension becomes a pretty sizable asset over time. And individually, sadly, my pension won't make a difference to sustainability in the world. But if everyone moved some or a portion of their pension money into a sustainable initiative, that would make a massive difference. And particularly given that, DB pension schemes are sort of declining and there's more and more DC, so we've got more control over that. There's more money sitting in that space. It does become a personal decision. I also think there are things like, again, it's every decision you make, of like even the little things of like, when you go and buy a coffee, just think about taking your own cup. And like, none of us need to be perfect in this, but every tiny step that you take in a positive direction, if everyone took that tiny step, it would be like a tidal wave. And so I think, yeah, it sometimes feels small. I think it sometimes feels like it's just too little to bother. And I think we've got to be really clear that we cannot let perfection get in the way of progress, because otherwise we won't do anything.
And I think also within companies, you can see a lot of small steps as well. The likes of ESG liquidity funds we're seeing, using LSEG green economy mark, things like that. Lots of areas in business that could be changed in a small and quick way as well.
Yeah, absolutely. And I think that goes back to what I was saying earlier, that I love the fact that you're using a recognised, established benchmark that people know and understand. And so it's really clear to your customers what they are getting. And I think that's really important, and helps them to measure their impact.
Great. We were looking to expand our offering in that. We're working with LSEG on that. So it's great to have that. And Kirsty, it's been great to chat to you today. Thank you very much for giving an insight into Rebalance Earth and what you guys are achieving. So all the best with that. And we look forward to watching you and perhaps catching up again next year.
Thank you so much.